Thanks for downloading this episode of the Resilient Advisor Show. This is part of our Investment Spotlight series. And in this interview, Chris Versace and I speak with Ricky Wright of Alkaline Water, symbol WTER. Chris, this interview really fit into the cleaner living theme that you have at Tomatica Research. What did you learn?
Well, Jay, first off, you're exactly right. When we think about people trying to put, better for you products in your bodies, on your bodies, in the environment, or in this case, beverages that are not sugary sweet, like traditional soda pop, that they're not flavored with artificial sweeteners or artificial colors, things like that. There's nothing better than water. And that's exactly what's at the heart of Alkaline Water's product portfolio. Hence, it really does mesh well with our cleaner living investment theme. But what I really like about our conversation with Ricky is that he not only paints the picture of opportunity for Alkaline Water as they morph from, alkaline 88 water into flavored waters and other water-related products. He also helps break down the classic growth story for a new product company, which is not only geographic expansion as they move from west to east, but really also about those other products and potential other products that they might have. And of course, Jay, as you heard, he talks about their new relationship with perhaps one of the best spokespeople you could have on the planet, Shaq.
Yeah, so I really had three takeaways. This seems to be a story about innovation, distribution. They seem to be attacking that in a very methodical way. And then branding and bringing, Shaquille O'Neal into the fold to help with distribution is going to be a home run. So I hope you...
Totally agree. Just I need to say one thing before we get out of here, Jay, with this is that, we have been believers in Alkaline Water, and just for disclosure purposes, we own it in the stocks under 10 portfolio at the street. Our average cost basis is about $1.
Jay Coulter and Chris Versace do not own any interest in the companies that they interview at the time of the recording or 30 days after the initial release of the show.
Today, Chris and I are speaking with Ricky Wright, who is the president and CEO of the Alkaline Water Company, which trades on the NASDAQ under the symbol WTER. Chris, as always, is going to go deep into the inner workings of the company, but we like to start at a high level. Ricky, why should portfolio managers or financial advisors keep an eye on your company?
Because we're a true growth story, and there's not a lot of growth stories out there. I think the average CAGR for the last 5 years has been over 45%. Obviously the COVID period, we performed better than most. We did a plus 20, and I see us returning to hyper growth this year.
Now, we're going to get into that, but let's step back a little bit, Jay. So when we talked with Ricky here, when you first came to the company, right, what was it that attracted you to it, right? So the prospect is a clean beverage company, Alkaline Water, right? We've all read in the press about how good alkaline water is good for you, but what was the pie in the sky opportunity that you saw, Ricky?
Well, first of all, I'm a co-founder. So when I came to the company, it was partially with the ideas. What really attracted me is that we have the opportunity to create a new category. Nobody was in the premium water space in the bulk water. And believe it or not, some 8 years ago, we thought about the eco-friendliness of a bulk package versus the single serves. The one thing about bulk packages versus single serves is, it's less plastic to begin with, but the chances of it getting thrown on a beach or thrown on a sidewalk someplace is very negligible. Candidly, that was really some of the initial thoughts that we had going into this thing 8 years ago, is that we're going to bring a package out in the premium water space in a place where jug waters are the only water you can currently buy.
And how is that morphed? Because when I walk down my grocery store, whether it's Harris Teeter or some others, I can see the big jugs, I can see the 1.5 liters, but I can even see some of your newer packaging, which I think is really cool, which is the aluminum can.
So it's morphed in the fact that a couple of things. One, we are by far the #1 premium water in the bulk space in the country. There's nobody even second to us, even close, probably within 20 million. We're actually the third largest seller of bulk water in the country of any of the brands. and we're the only premium in the top 10. So that part morphed naturally. Then all of a sudden, we decided to expand into what we call our single serves. And our single serves morphed into where, if you looked at the stats, I think just single serves alone, we'd still be in the top 25 of all the waters that are in the premium enhanced water space in the country. And then you look at where we continued to morph was that we were literally the first national company out with our eco-friendly aluminum bottle. And so this was, again, a step. And I've got some stuff on the drawing board. I was actually looking at it that continues to go down that road where we continue to be conscious of the trends, conscious of what we think the consumer wants, and conscious of what the consumer needs.
When I first read about you guys, Ricky, and I saw where you're going with water, one of the things I really liked about it was it really resonated with our cleaner living investment theme, right? It's not a sugary beverage. There's no artificial sweeteners or anything. But as you're embracing this cleaner packaging as well, the aluminum cans, and if you want to tilt the board, you can do that. But to me, that says that you're right at the forefront of how consumers are really starting to shift their spending, whether it's for cleaner products for themselves or ones, again, that are less bad for the environment. But what also attracted me to your story is that you are very much in that growth phase of a lot of companies, which is more geographic in focus, right? So you not only have an expanding product portfolio that we'll talk about, but you're really a geographic expansion out of the Southwest East as well, correct?
Yeah, no, it's really, that's a fun story, Chris, for us as well. Besides the fact that we have focused, in fact, Clean Beverage, I trademarked some 3 years ago. Just to show you that this isn't just, we woke up one day last year and said, oh, the trend is, we foresaw the trend. But, we have about 4.5% of the enhanced market in the West. We have about, and these are all Nielsen data. This is all public if you can, get to the Nielsen data. We have about 3.8% now in the Southeast. Mm-hmm. Okay, about 1.8 in the Midwest and about 0.08 or 0.8 in the Northeast. So, there's about 100 million people. I always try to, and I said this on the earnings call this year, is that, there's $30 to $50 million just for us to hit the same market penetration in the places that we really haven't penetrated. And it's been a plan, Chris. The problem with water, and this comes from a seasoned businessman, the problem with water is it's heavy. Mm-hmm. So you have to move your supply chain closer to where you're going to sell to. It's really interesting. So in one case, you've got a product that is heavy when it's filled. Mm-hmm. And in the other extreme, you've got a product called empty bottles. That take up a bunch of space when they're being shipped to where you fill them. So there's always the dichotomy of, how do we fix that? And we fixed that by doing a couple of things. We opened up an East Coast blow molding factory with one of our co-partners, one of our co-packers. We brought in additional handles to the East Coast. Okay. We've previously China and West Coast only. We've opened up new factories on the East Coast, co-packers. And so we continue, we've announced another one up in PA. And so we continue to move closer to where our target markets are.
So if you were to look at yourselves, either compared to 12 months ago or 24 months ago, the number of purchase points that a consumer can pick up the product, whether it's grocery, convenience store, drugstore, what have you, how would you compare them? Would you say that you're 2x, 3x what you were 12 to 24 months ago?
It's we're not quite that much, Chris. And the only reason I say that, we're probably about 20,000 up. And most of that, candidly, was 19. Because unfortunately, the last year of 2020, there was not a lot of resets. Everybody was having trouble, with the exception of us, getting product to market. There were a lot of shortages. And so this grocery stores they just didn't do the resets. They just passed. It was kind of the last year. That's one of the reasons I think we're going back to hyper growth, because most of our 20% growth last year was organic, which is just crazy when you think about the fact that we've been in some of these markets for 5 or 6 years, 7 years.
Right. But you guys have added over the last year, certain drugstore chains and other things, though.
Yeah, I think we're 20,000 up in the last 2 years. If you're looking for a hard number,
And just for the listener, when you say 20,000, is that 20,000 points?
Yeah, that's 20,000 new places you can go buy Alkaline 88
Okay.
over the last 2 years.
Okay.
And that includes places like Rite Aid, CVS, okay, which, Dollar General, some of the Dollar General stores, so it's a Dollar Tree, I should say, not Dollar Tree stores and those kind of things, where we are in a place that we have not previously been.
Okay. And when you look at it from a top 10, top 20 location perspective, again, customers that, we as consumers would walk into and buy, how well represented are you in, whether it's the top, top 10, top 20, 25, 50, whatever metric you want to use?
Yeah, so we actually track against the top 50, Progressive Grocers top 50.
Okay.
And I think we're like in 37 of them. We're in Walmart, we're number one, we're in Amazon, we're number two, we're in Kroger, number three, we're in Albertsons, number four, we're in HEB, Publix. I mean, those are, if you look at the top 10, I just named 6 of them off the top of my head.
Right.
Yes,
right.
it's probably there too. So, if you just look at where we are, we're very well represented. The one place that we got the Shack deal, which we haven't talked about.
Oh, we will. We will.
Is one of the things that will bring us with his ability and Authentic Brand Group's ability is that we've never gotten to the clubs. All the things that we've done well and right over the past 8 years, clubs, we've never been able to knock down that door. And we think with the Shack Pack, we'll get there this year.
I like that. So just a couple of questions before we pivot towards that. So you're in these doors, as they say. I think you rattled off, like you said, 7 of the top 10, but you still have room to grow inside each of them as you move west to east, correct?
Yeah, no, it's a crazy good story on that. It's the old 80-20 rule, right? So, what we don't have is, so let's just go West Coasting, because that's a perfect example, right? I think we average 4 SKUs in a West Coast store. Okay, now we go to the Southeast, which we haven't had as much experience. We're probably 3 years behind there. Mm-hmm. And so let's just say we average 3. And I'm making these up because I haven't looked at the most recent stats, but I know I'm pretty close. Mm-hmm. Now you go into the Northeast and we might have 1, maybe there's only the gallon, maybe 2 SKUs. Midwest, right. The same thing. So just organic growth within adding additional SKUs. And the one thing that I think I'm most proud of is that, we've spent virtually $0 in traditional marketing. So everything is word of mouth. Somebody actually drinks the water, turns to their friend and says, hey, you got to go taste this. It's a great tasting water. And so our 20% organic growth last year was without additional SKUs scattered throughout. We added maybe 7,000 to 10,000 stores, 7,000, let's just call it. And it wasn't the function that a lot of my competitors, they pounded away at their DSD networks and they added 25,000 stores and they still did not outperform us. That's the amazing part.
And I think what's interesting about this is it's primarily in the core water offering, the Alkaline 88, but you guys are been working on expanding your product portfolio, not just into CBD, which we'll talk about, but into different flavors and other things that I think there's a lot to go here.
Yeah, I will go back to that. The second fastest growing sector, you get outside the alkaline water sector, which should hit $1 billion this year in the US alone, I think 3.8 internationally. You go to the flavored waters, very fast growing sector of the enhanced water space. We entered into that. Unfortunately, again, COVID hit, but we're having tremendous success this year. I've told the analysts, I think we're a couple quarters out still from being able to, have to segment. But I think in the next couple of quarters, you'll start to see some segment reporting with respect both to the flavored waters as well as the CBD water.
And with CBD, that's kind of a bridge to your other CBD products. But I'm just curious, when you think about the future of your product portfolio, there are obviously going to be more flavors that you can do. What are your thoughts about the larger functional beverage space, whether it's functional waters or something else?
Chris, you must have at least read my my call. We are pivoting to not away from the alkaline water, because the alkaline water is a functional water. So that's always going to be our base, and it's a great base to have, and it's growing. Like I said, we are the only enhanced water space company since 2019 that has grown double digits every 4 weeks in units and volume. I mean, that's crazy when you think about that, right? Just in terms of that, we're the sole company in the country that has done that in the top 10 brands. The thing with the pivot is that obviously, if you looked at what I said during the most recent earnings call, is that we are pivoting in CBD first to functional beverages.
Okay.
So, right in front of me, we will come out within the next, I'm gonna use a cheat sheet here because I was working.
Go right ahead.
I was working on it last night. So within the next 60 days, we will come out with a relief. We will come out with a revive. We will come out with a refresh. We will come out with a resistance. We will come out with, a re-energized, so we are coming out to the functional. We will start that in the CBD area. And there's a lot of reasons. We have a unique delivery system that is not in the public domain yet. Hopefully I'll make that announcement within the next week or two. I don't like to get over my skis. I like to have things already produced. I'd love to have an order in hand before I make specific announcements, but we will then take that experience, some of those formulations, and begin to move them to the functional water and the flavor side. And holding my favorite watermelon.
That's right. That's right. So just to clarify though, your plan, and correct me if I'm wrong here, because I don't want to put words in your mouth. Is it to stay in functional waters? Because there is a distinction with functional beverage.
Yeah, I think it's functional. It's functional waters initially for sure. Okay. I don't think we'll get into sparkling, and there's some reasons for this. Some of that, Chris, has to do with trying to be true to the 8.8 pH. Okay. Once you put CO2 into a sparkling water, you destroy the alkalinity.
Okay.
So and that's why some of the reasons we develop our unique delivery system is so that we maintain, the water, the base water will always be Alkaline 88 in a lot of what we're working on.
Okay. And I suspect that this transition towards functional waters, that folds very nicely into the Shack Attack plan that you referenced earlier.
Yeah. So the good news for us there is that, we will finally get eyeballs on us that I think we've not had before on the consumer side with Shack. We've talked about this in the quarter or the year-end call that, we expect to have by the third quarter of this year, third calendar quarter, not third fiscal quarter, some of the advertising, et cetera, some of the media stuff already in the can. We'll begin to deploy those assets with Shack, and a lot of that will be focused on the Shack pack. Literally, we will come out with a Shack 6-pack, 2 liters. That is hitting the markets this fall. We will then go into the flavoreds, and to the extent that functionals are ready, we'll move into the functionals. And I'm working on, an additional size. It might be slightly larger, maybe Shack size.
Shack size, yeah.
Some Shack size aluminum. Not out yet, but all the particulars are done, and now it's just a function of making sure that it's what we think the consumer wants and what Shack wants.
And from a business perspective, as you pivot more of your mix over time into CBD and then other functional waters or larger sizes, I suspect that has a positive impact on your overall ASP, correct?
Absolutely.
Okay.
Some of this is going to let us, we launched with Hensley and Nevada Beverage and another DSD network this year. We had stayed away from it. It's a tough place to actually make money. It's kind of like the old saying that, the DSD wins, the retailer wins, the manufacturer, not so much, the co-packer wins. So there's kind of, and that's kind of been the business model. I mean, you look at some of the balance sheets and some of the public beverage companies, they're smaller like us. I mean, most of them raise, 2 to 5 times as much as we have to get where we are relative to market strategy. So we've always stayed direct to warehouses. And now we're testing out the DSD in some specific markets where we're already strong. Okay. And we're going to see how that rolls. And we believe that some of this functional beverage will open up some space in some convenience stores that maybe previously we had to compete with somebody that they were already happy with.
Yeah, I mean, to me, it takes you from competing with look, when you walk into the water aisle of the grocery store, just like, milk today, and, there's a variety of choices, right? But I think it expands where you're going and the perception of how people think about you. I don't want to say that you'll be the new vitamin water, right? I'm just throwing that out there as an example. But I think as you conquer the functional space, it's going to help your overall awareness.
Yeah, you know, Chris, I have a slightly different spin on that than
Sure.
vitamin water.
Sure.
You know, I'm not trying to become an energy drink or a burning drink like Celsius did. Okay.
Or
But
Bang or some of those others, right? Yeah.
But I am trying to develop some functionality that carves out a space for us as a first mover within that space.
Okay.
Okay. That says, okay, you know, these guys again are ahead of the curve.
Mm-hmm.
They see what the consumers are asking for. You know, on my screen, I have the Bright Field data and Catalina and a bunch of other data sources. So I'm data driven. You know, it's one of the things I use every week in terms of making my decision process. It's not flipping a coin and saying, you know, that sounds like my wife said that would be really good. You know, I'm not that guy.
Right.
I actually drive it by the data. And you'll see that a lot of what we're doing is trying to stay ahead of the curve, not set the curve, because I don't want to necessarily be a pioneer. Okay. I'd rather be a settler.
That's, you know, we talk about this all the time, and that's Apple's strategy, right? If you notice Apple, they don't really invent anything first, right? They're always second to market. They refine it and they make it better, easier to use, you know, something like that. And I think that's smart on your part, because you can kind of coast on someone else's higher R&D investment dollars.
You hit it on the head. You know,
Yeah.
The pioneers take a lot of arrows, right? And a lot of bullets, and, you know, are out there as the fodder. You know, they're the marching shoulders. And a lot of times the settlers are the guys that come behind and settle the land and grow the crops and harvest, right? And
Mm-hmm.
I want to be the harvest guy, not the taking the bullets guy.
Correct. So when you're leading edge here, one of the things that you're incorporating is a line of CBD infused product. And you said that over the next couple of months, that'll start coming out, I guess, in greater flavors and greater volume and greater doors. I imagine you have some visibility on that, given the timing with your partners and customers, correct?
Yeah, we do. You know, 2 years ago when the Farm Bill went through, right, there was supposed to be some kind of FDA approval for CBD. We literally were the first company in the country to already have a formulation for CBD water at the time. You know, we pivoted to some of the other topicals and ingestibles, which are still, you know, in our mix. But candidly, Chris, we are a beverage company, and
Right.
we're a water company. And when we go to have conversations with buyers, you know, the first thing they ask us on the CBD side is, hey, can we try your CBD water?
Mm-hmm, mm-hmm.
So we're going to be a water plus one.
Well,
Water plus two.
So I can say this. I have tasted, as you well know, Ricky, the alkaline CBD infused product. And I have to commend you, because you've done a wonderful job of, as I like to say, taking the farm out of the drink. Right? There's no grassy or farmy kind of taste, you know, aftertaste. So I commend you and the team on doing that. But I just wanted to just hang on that CBD product side for just one quick second. I know that you guys have been, you know, dabbling, shall we say, in, you know, creams and tincture drops and other things. How big can that be as a part of the overall business? I mean, you know, not in the next 6 months, but, you know, let's say 2-3 years down the line, is it still going to be, you know, sub 10% as you're thinking?
You know, Chris, great question. It's going to be macro trend based. Okay, candidly, you know, one of the things, you know, being an entrepreneur and you know, being 43 years deep into business,
Mm-hmm.
You know, what I've learned over that period of time, and some of it's by the school of hard knocks, is that if the marketplace is big enough, if you look at the opportunities we're going after,
Mm-hmm.
okay, CBD, international, hospitality, e-commerce, right, big box, club, you know, they're all billion-dollar opportunities, right? And so you don't always need to be a 10%er in a billion-dollar opportunity to really have a great business. And if you look at CBD, I think the lead guy right now, which is Charlotte's Web,
Mm-hmm.
I think they still own less than 5% of that
Oh.
projected to 22 billion. So me, for CBD, I'm looking at it and saying, you know what? Let's go hit it with the CBD water and some of these other ingestibles and topicals that the market seems to really be glommed onto. And then let's just see what happens with legislation and FDA guidance, because I can tell you that I'm already on shelves, sets in major companies. Once they green light from their attorneys, you're going to start seeing, what I do with the dang thing, you're going to start seeing the CBD water on their shelves because they've already done all the tests. So the question is, it's how quick the legislation happens and how quick the trend stays with the consumer. I still think I'm a big consumer curve guy, because I studied it, way back when. And I still think we're on the early stages of the CBD consumer curve.
Oh, I think you're absolutely right. And I apologize. What I meant was,
so I don't know if it's going to be 10% or 50% 3 years from now, Chris. I just don't know.
But for your business.
That's what I meant. Okay. I don't know if it's going to be 10% or 50%, because some of the other things we're working on, I think have as much potential. Okay, in terms of the flavor infused, we have a great product, not a good product, a great product. Some of the functionalities we're bringing out with the CBD beverages are not good, but great. Going back to the taste profiles, I read an article by Pepsi's president the other day, and the number one thing he said is everything they work on has to taste great. And that's kind of been my philosophy since day one.
Yeah, that
doesn't taste great. Why do you do it?
Well, see, to me, that earnings call that you're referring to from PepsiCo, their June quarter earnings, that had Alkaline Water stamp of approval all over it because of what they said about pivoting away from sugary beverages, right? And how they're trying to, again, hone in on, to your point, taste. And it's, to me, that's just a big proof of confirmation. I was talking with Jay about this earlier. When you see companies like PepsiCo, Coca-Cola, and the like pivoting towards, non-sugary beverages, better for you beverages, and the like, you guys are already there, right? So for me, what I have to wonder is, at what point do you start popping up on these radar screens? Because the water business and the beverage business in general, it tends to be fragmented and then consolidate and then fragment all over again as different hot points come up, whether it's teas or whatever.
I think that we're probably on some people's radar screen. We are the largest independent water company left on the enhanced space. Okay, and there's not a close second. The difference between us, in fact, we're gaining on a name, Chris, that if you'd asked me 3 years ago, could we ever pass this particular enhanced water, I'd have thought no chance in heck, because it's one of the big boys. And I see us within 18 months of actually surpassing them in terms of gross dollar volume at the retail level, which is just amazing to me.
Absolutely.
And we'll move up to number 9 and maybe even have a shot at number 8. And I see that a lot of it has to do with why I'm doing some of the proof of concepts I'm doing. It's not that I need to go spend $260 million to be all present in every DSD in the country, right? What I need to do is spend enough money and support that team well enough that I can prove Hensley out of Arizona, Nevada Beverage out of Nevada, maybe pick 1 or 2 up in the East Coast, right? Improve the concept there, because whoever's going to buy us, if that ever occurs, right? One of the bigger problems that some of these guys do is they don't leave enough green space. So it's one thing to hit 100 million, right? And have done it in every possible outlet you could be in. Have your ACV of 90% or 88%, right? What do you have left the big boys? 12%, right? For doors to go to. I'm going to prove concepts in a lot of different places and have already. And then once those concepts are proved, it makes, in my opinion, and I could be wrong, just makes us more valuable. It gets me a higher multiple than the one-trick ponies.
I totally agree.
And
totally agree.
I view Core and Essentia as one-trick ponies. Not that they didn't do a great job, because they did, but they really are one-trick ponies.
I totally agree. And it's the branch into these other areas in terms of flavors and functional that I think are really going to put you on the map. Not that you aren't there, but it's going to solidify your position.
Yeah. And so the funny part on that, Chris, is, when we chose Shaq, we chose him for very specific. I mean, they chose us as much as we chose them, because, Authentic Brand Groups actually owns the brand Shack. There's the Man Shack and the brand Shack.
Right.
And we had to run that gauntlet, and they're owned by BlackRock, so it wasn't a little gauntlet to run. They had to see some significant upside to even think about doing the deal with us. And one of the things with the Shack opportunity for us is the fact that we have the opportunity to become a household name, literally become a household name, and then that just becomes, the brand becomes now a household name. And I have pivoted between Alkaline 88 and A88 as the branding, and so that we can then like a V8, or I always use Heinz 57. How often do you see 57 on Heinz anymore? You don't. It just is Heinz.
Correct.
Right. And so again, with that in the back of my brain, we've trademarked all those things and are prepared to make us a household name over the next 18 months. And the beauty with the Shack deals, it's 3 years. So it's not it's not a ready fire. I got to get to the races and I got to be there by this time next year. It's more the tortoise, slow and steady wins this race.
Got it. So let me just pivot, because we only have a little bit of time left, and there's 2 or 3 things that I really want to catch on. One is when we look at companies, one of the things we try to think about is capacity utilization, right? Are you running so hot that you can't expand anymore? You need to bring more capacity on. How do you think about your capacity, particularly as you try to bring all these other beverages onto market? Is it something you need to bring the capacity up first and then fill? Or is there a way that you can kind of bring it on almost real time?
So it's a co-packer model. So low people, low capital, annuity, cash flow margin. Nothing happens without a sale. Ricky Wright's personal business philosophies, right? So it's a low capital portion of that. And I've got a manufacturing background as well, and so I have always said, okay, guys, this is why we were so hot during COVID, because we were literally the only guys in the country to put water on people's shelves.
Right.
Because I had prepared for the capacity. And so we are always ahead of the capacity.
Okay.
Even the delivery system I've worked on, the reason I worked on that is because I should be able to do this in my current plants, and I won't have to worry about finding a hot fill someplace or a canned product someplace. I can do it within the 10 or it'll probably be 12 relationships that we've already developed over the last 18 years by this time next year, which we've always talked about here to make sure we could do 100 million wholesale, okay, in the blink of an eye.
Okay.
And that has always been kind of the where I've set out with my operational people.
So when you're thinking capacity, I know a lot of people were like, we're thinking 3 months, 6 months ahead. It sounds more like you're thinking 18 months plus ahead. You're
absolutely right. I'm always, and if you're around me long enough, Chris, most of my thinking is 6 to 18 months out.
Excellent.
I've got very good people to operate this business, very good people in seats. We're adding bench strength every day. And it's one of those things that, we added a hospitality guy, we added an e-commerce guy. There'll be a couple of more announcements coming up soon. And it's all about getting the right people, not to necessarily steal the GE model, but it's putting the right people on the bus.
Right. Now, capacity is one thing here in the US, but you're also talking about international expansion. And I think that's one of the things that you're hoping that, if I read the literature correctly, that Shack can help with. That's a different business to some extent, isn't it? Where there's different challenges, I guess, is what I'm asking.
Yeah, there is, Chris, but part of the secret is that I've done business internationally for 20 plus years. Okay, so there's not this, I'm afraid of the international markets, and part of it is that I paid close attention when we first started this, the Baltic rates, putting something on a ship and sending it versus putting something on a truck and going across the country, and they're not that far apart. And so right now we've gotten FDA approval on 3 strategic locations: East Coast, West Coast, and Gulf of Mexico, co-packers for export. So as we develop, Canada is a little different story, because we can go into Canada and there's a CBD play there with the people we're talking to. They can do both for us. And so Canada's a slightly different story, but we'll probably approach that market slightly different. So just because of packaging size, et cetera.
So is it fair to say, at least, near term, and by that I mean, let's call it 12 to 18 months, your international expansion is more covering North America, not necessarily going to Europe?
I think we'll go to Asia first. I don't think we'll get to Europe. If we're going to go on an ocean, I think it's going to Asia.
Okay. Is there any particular reason for that?
There's something about the number 88.
Oh.
Okay.
Okay. I'm not steeped in that. So.
Oh yeah, it's the lucky number in China.
Okay. Okay.
Okay. It is by far, it means it's Baba, Papa. It's a lucky number.
Okay. Okay.
Okay. So it is. We were actually in China before the embargo, and then basically our product was destroyed because they weren't going to take any more U.S. product in. So we can re-up that at some point in the near future. Not sure it's going to happen in the next 12 months, as you said, because it is a process.
Right.
They have their own separate FDA. So despite the fact that we're approved here, it doesn't mean that the CDA in China has approved us or some of the other Asian markets.
Okay. I think when we first spoke a long time ago, you had mentioned to me that, and I want to make sure I get this correctly, because if I remember correctly, it's a powerful point, that the water business is just shy of self-funding.
Very true statement. So when I look at, Flow just came public, right? And I look at all, what they've done and what they've spent and how they've got to where they are today. And I look at us and absent the public market dollars that we do spend, because there is a substantial public market support that we spend every year. We've had months, and I've said this publicly, we've had months where we've been better than break even. Okay, at the operational level. I mean, the operational level, we could go cash flow positive tomorrow, operational, Chris, but it would slow down our growth. And that's a very simple model for me. I just quit selling to people that aren't taking full truckloads. So let's just use the Rite Aid as a perfect example, right? Or CVS. 3 years ago, CVS, or 2 years ago when we started with them, they were taking less than truckloads. I was losing my shirt every time, right?
But you needed to be there. You needed to be, but you needed to be there.
Right. So I lose money, right? But every truckload, and it's not a little bit of money, because sometimes when you send a pallet or two, it's 120% of your freight cost is 120% of what you're getting paid, right? But slowly but surely they've moved to full truckloads, right? So now I make money on every time I ship to them, right? And that's been the business model for us, is that we support where we think we need to be. But ultimately, when we mature a little bit more, and maybe it doesn't happen in my cycle, right? But when we mature a little bit more, full truckloads, cutting out the broker. I mean, there's a ton of ways that you could make cash immediately. Vertically integrate. I could pick up 20 points probably, and just if I decide to go spend a ton of money on a plant someplace, or partial plant. There's tons of ways that we can increase our profitability in a hurry. But right now, we need to stay a growth story, and we've never been stronger manufacturing. We've never been stronger sales. Okay, we are having record PO sales month after month here. Okay, it's an astounding thing to me, because the market's opened up, but we continue to grow as faster than anybody. Which I just looked at the 4-week numbers, and I'm like astounded at where we are relative to the market. And so those are the real stories for us. Is it to get back to that 35 to 50% growth year over year?
So the one thing I will say is, when a lot of investors, they always focus on the pie in the sky, right? The great opportunity to be had. But I do think that it's important for people to recognize potential risks that are out there. So I would close with this, Ricky. You got a great story, but what's the one thing, if you had to isolate it, that keeps you awake at night?
You asked me that 6 months ago, Chris, I would have said the supply chain, because supply chain is always a challenge. Right? Manufacturing, you have to get the manufacturers, you have to get, right now, I think the one thing that may keep me up at night, but not like nightmare keeping me up, is to successfully implement a DSD strategy and the hospitality strategy. Those markets are so huge for us. I think the CBD's coming. I think the international will happen as a matter of course. I think we're going to get into clubs. Okay, so my angst at night is, okay, how do I prove myself out in the DSD? We're finally getting that up and going this month, candidly, where Hensley's taking on a big role, and that's John McCain's wife's company. So it's very well. It's an ABG. It's an Anheuser-Busch house. So it's very well recognized throughout the country as a major player in the DSD network. And then the hospitality. We stubbed our toes last year because we got into it right at COVID. And if I can go prove that out and pick up some of these big hospitality chains, all of a sudden that's again another game changer for us. And that's somewhat why I'm working on some of our packaging, because I think this is very attractive to a lot of hospitality industry. Get away from plastic bottles, get away from glass bottles. This comes nice, cold to your table, not a bad package.
What about, as we're going through the current earnings season, we are hearing companies talk about input costs, fuel costs, that sort of thing. Not that it's a huge worry for you, but any thoughts on that?
Yeah, that goes back to some of what I said earlier in terms of, we need to mitigate where we can, right? We're trying to do some special deals with some of our manufacturing, maybe do some vertical integration, some co-projects, joint ventures, some things that increase our efficiencies. We're opening up some new plants, kind of close that gap. I mean, if I give myself nightmares, that is a nightmare, like where the fuel costs are right now, right? Those kind of things. Resin is increasing. We did go to our first price increase. I'm a big elasticity demand guy, so I've done the studies. I don't believe it's going to hurt us at all in our growth trajectory. But you kind of always in the back of your gut say, oh, well, what if it does? How do you backspin and keep your margins? So, margin contraction, I guess if there's something that does look at night, margin contraction, we're trying to stay ahead of that curve. I think we're doing a really good job as a company, especially a small company, to kind of pre-see or foresee what was coming down the road. And we've taken some significant steps in that arena, but it could happen. The freight costs could come out of control. We've got special relationships with our carriers though. One of my philosophies has always been become the most important. It's a little bit of I stole it from a couple other guys. It's not a Ricky Wright original, but if you are the most important guy to that particular manufacturer, and without your business, they close. You can drive a harder deal, and you can drive a fairer deal for both of you. You can both take a little bit of haircut here and there, and both survive.
Right. Yeah. I think as long as you guys are in it to win it together, everybody wins, and in tough times, everybody, gives up a little bit. I think that's a pretty fair way to go about it, personally speaking.
Yeah, no, and it proved out over COVID. I actually got on one of the things that probably used to drive my board crazy, not so much anymore, is I might get on a plane, go shake a guy's hand and have a meal with a guy, kind of guy.
Smart business.
Might only be once or twice, but it allowed me to pick up the phone and call everybody I needed to call.
So,
so those allow me to sometimes, when times do get tough, to make a phone call and figure out what is a win-win for both of us.
Well, I didn't want to say this while you were talking earlier. I think that if people want some real proof in the pudding, you compare your sales to what we're seeing in the monthly retail sales numbers that come out by the Census Bureau. When you look at grocery, that's flat year over year, and you guys are crushing it. I think that's some much needed context that should kind of clue people into the story and the possibility.
Yeah, it's a pinch yourself moment, right? I was a restaurateur, my first entrepreneurial venture, and God rest his soul, my partner died, but he would always put into me, Ricky, you can give a small plate, you can give crappy service, you can overcharge, but if you deliver a great meal, they're coming back.
Oh yeah.
Okay. Yeah. Conversely, I can give you the largest plate, cheapest price, and best service, but I give you a crappy meal. And the thing that he taught me was, you're not losing. If there's 6 people sitting at lunch and you serve one bad meal to 6 people, you didn't lose that person. You probably lost all 6 because they probably just said, we're going to lunch today.
Well, you probably lost more than that, because who else are they going to talk to about it? And I wouldn't go there. That meal was horrible.
Right. And so, that always stuck in my back of my, that's why it took us 2 years to develop the flavors. It's always about what goes into the consumer mouth, quoting the president of Pepsi. It's got to taste great.
Exactly. Jay, I'm going to give you the last word.
Hey, listen, Ricky, I'm sure you can see why I just sit here and watch Chris go through the questions. He does a great job of letting people come on, tell their story, digging into the weeds of the why and the how, the risks, the opportunities. I learned a lot today. I learned 88 is an important number in Chinese culture. So if podcast listeners, if you'd like to learn more about the Alkaline Water Company, visit the alkalinewaterco.com. That is the alkalinewaterco.com. Ricky, we really appreciate you coming on.
I appreciate being here. And as one last comment, I always say this, I think I'm the most undervalued stock on the market. We only traded about 1.5 times revenue, and beverage companies get sold for a lot more than that traditionally on a growth company.
True.
All right. Well, thanks for coming on, Ricky.
All right. Thanks, guys. Have great days.
Important information. The information provided is for educational and informational purposes only and does not constitute investment advice, and it should not be relied on as such. It should not be considered a solicitation to buy or an offer to sell a security, and you should consult your attorney or tax advisor. All information has been obtained from sources believed to be reliable, but its accuracy is not guaranteed. There is no representation or warranty as to the current accuracy, reliability, or completeness of, nor liability for, decisions based on such information, and it should not be relied on as such. Pinger Systems, LLC, doing business as Resilient Advisor, was compensated for the production of this content.